Good morning, everybody. Welcome. Hope everybody's having a great morning. We'll let some people file in here, and then we'll get started here in a couple minutes. Yes, sir. We will discuss that, though. We're at an interesting inflection point, though, from a net GEX standpoint. So we'll go over that. But even though it says put dominated, you always need to look at the net GEX and see if it favors one structure or the other. That would be more negative or more positive. So we'll check that out. Stay tuned. More information to come. Good morning, everybody. Good morning. I posted quite a few posts this morning pre-market as we had non-farm payrolls and really interacted very well with our structure levels that we already had in place pre-market. So we'll take a look at those too. As well as our market trend model was released on TradingView. So make sure you check that out also. All right, it's 9:02. I'm going to go ahead and get started. We have a lot of content to cover this morning. And if anybody wants to cover any individual equities, I'll do that at the end. So welcome. This is Michael from GameEdge with our pre-market prep for GameEdge for Tuesday, December 16th. As always here at GameEdge, we'll cover our three pillars: sentiment, structure, and trend. So let's go ahead and jump right into it. This is our market trend model based on the tick index. You can check any of our previous posts out, but we have extensive education on our blog, as well as our GameEdge Fast Pass course. Quick takeaways: the bolded white lines are intraday or instantaneous CT. So if you're a 0DT trader, this is what you probably need to be looking at or following. Significant downtrend yesterday, continuing the weakness in the overall market, again, indicating more selling versus buying in the market. And then we add what we call our railroad tracks. These are shorter term moving averages, momentum moving averages. These are your 1 to 3 day time frame. So if you are a swing trader for 1 to 3 day, you'll be watching these, and these have crossed back down also. So again, this is a risk off, more selling within the overall market. You would be looking to be short the market or at least reducing your capital at risk. And then our longer term look back period is our colored ribbon, the red above cyan. Again, we've cut through that colored ribbon now. So our mechanical portfolios were turned off as our red now has a negative slope. So we will not be entering any positions from a long-term mechanical portfolio strategy of P-Trans to PGEX or wheel strategy. Draw your attention up here to our breadth indicator, new highs versus new lows. You saw the previous few days after FOMC extensive outpace of the new highs, and then we kind of trailed off Monday. And then into yesterday, we were really flat for new highs versus new lows. New highs barely outpaced new lows. But you also see here our filter cumulative tick indicator, plus 1,000, minus 1,000, larger block orders, institutions. It started the day fairly flat, but then quickly turned to a linear down type fashion where institutions were selling pretty significantly into the move down yesterday. So we'll watch this. Historically, we have came into the colored ribbon, and you can turn back to the upside if this is going to be starting of a new uptrend, or we'll see a failure where we'll emerge below the colored ribbon and we'll start to see a significant more larger pullback within the overall market. So really be watching this intently at the open today, at least from a 0DT standpoint, swing trader standpoint, and a longer term period. This is our glance at our TradingView market trend model that we released yesterday. Again, this is available to our members in Discord, so you can come in and check that out. But again, matches our market trend model and TradeStation. Also really provides a great visual with the colored background of what is occurring within the overall market of buying versus selling. Yesterday, it really was an invaluable tool. We did not see any bounces for the downtrend for the middle part of the day. And then we started to see a flattening of the overall tick or CT into the afternoon session. And then we just saw some consolidation staying above that 6,800 level. And we matched this with our volume command yesterday we posted. And once the put speculation to the downside really started flattening out, we were pretty confident we were not going to see a significant more downside for the rest of the day. So make sure you check this out in our Discord. Again, TradingView MTM released. This is version 1 to 1.2. And if we do need to update or have any significant updates, we'll push those out also. We also have this available for Thinkorswim, and you can check that out too. All right, moving on to the SPX. This is the largest, most notional value option structure that we look at. This is the SPXA for today. We are call dominated still into the monthly expiry. You see the transition areas here that are important levels to stay above. 67.45 is really below that is where we could have some of the wheels start to fall off and see significant pullback down towards 6,700 or even lower, even though we are call dominated. Within the overall transition area, we expect it to be extremely choppy. And then to the upside, we see 68.70 and then 68.50 is PGEX, 67.80 to the downside is INGEX. We tested 67.70, 75 overnight, it looks like, and held. Again, that's where the overall GEX transition is, and then we have DEX transition here. So key areas to the downside to watch for bulls and bears. And then we are call dominated still, so that continues to be supportive on pullbacks unless we start getting below these key levels and transition levels where we'd probably anticipate some more weakness. All right, moving on the SPXP, all expiries turned on. We are call dominated heading into the day. Understand that the transition above is 68.40 to 68.45. If we're below that, we'll consider that cautionary and bearish. And then again, the GEX transition here all the way down towards 67.95. Again, we are called dominated, but you see a significant amount of put speculation to the downside also. So these are going to be important areas to watch, as if we start dropping below these areas or open below these areas, we'll capture these out of the money. These were out of the money puts, but these are in the money puts and these are out of the money puts. But as we move down, we'll capture those, adding more negative delta to the overall structure. And you'll see this on the delta balance also. Even though we are call dominated, the speculation to the upside is kind of degraded, and we would like to see that continue to grow if we're going to have a large price appreciation to the upside. So we'll continue to monitor this, obviously, day over day, and check it out. Draw your attention here, Daniel. Even though we are call dominated, our net GEX is only 937. So that is barely above the zero. So we're at a transition point where this could easily turn negative and this could easily turn put dominated. So that's the key takeaway for this overall structure and where we're at for today. All right, moving on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. We've really been talking about this, the move up in the SPXP, and then the overall pullback. We saw this declining red dotted line. So again, this is short dated call gamma versus short dated put gamma. And now we're just barely above the 1 area. So understanding that that we do give an edge to the bulls, even though we're at 1.0, but this could easily drop below. And we could have the short dated put gamma really start overriding the short dated call gamma, which most likely would lead to a further pullback in the SPX. So we'll continue to watch this. Again, if the SPX's price is appreciating to the upside, you want to see this GEX ratio really driving to the upside, also indicating short dated call gamma coming into the overall complex. That would be call speculators speculating for higher prices. All right, moving on to the delta balance. Again, this is what I talked about here. We separate the individual planes above and below spot price in the overall structure to get an idea of where market participants are positioned. So heading into the day, this is the 16th right here. So this is the red dotted line is your left-hand plane. This is below spot price. Green dotted line, right-hand plane above spot price. And then the blue is the delta balance, which is the aggregate. So obviously you can see we are still in the money call dominated. Or in the money calls below us are still above the zero line. So bulls are still in control of that. But you notice the green dotted line is well below the zero. So again, out of the money call speculation is pretty much non-existent. And the delta balance has been completely dragged down because the out of the money speculation is completely degraded. So again, this is an overall bearish weak look for structure. We do see a rebound into the 18th and then obviously into the end of the month expiry to the 19th. So we'll continue to watch this projection on out in time. This is anticipatory that market speculators will continue to be in the money or hold their in the money calls. And you see a slight out of the money call speculation driving up and barely getting above zero. So again, still an overall weak structure, even though we see a bounce in the delta balance as well as the left-hand plane below spot price. I would anticipate this is probably some out of the money puts being monetized being closed into the end of the month expiry, and then the money calls still being supportive. But an overall, just a cautionary, weakish look as we head into today for the overall structure and where market participants are speculating. All right, let's move on. The SPXP net stat command. This is high sensitivity levels for today. Again, noticing that 68.50 in the money puts overhead, the charm level at 68.50 out of the money calls. These will both continue to be a headwind for us as we try to move up. In the money calls below us, you know the left-hand plane integral is significantly less than the right-hand plane. So again, we talked about those in the money puts overhead being dominant compared to the in the money calls below us, at least from an integral standpoint. And then the charm at 67.80, those should be supportive as long as we're above it. And then the net gamma fuel to the fire to the upside or the downside. And then our net VANA. Net VANA, the right-hand plane, does have a little advantage for today. So if we do see some volatility drop as well as out of the money call speculation, this can provide a tailwind and possibly overcome this net charm level at 68.50. But we would have to see a significant drop in volatility as well as a significant amount of out of the money call speculation, which that is what we're lacking at the moment, as I just discussed with the delta balance to the upside. All right, let's move on. The SPXP 0DT structure for today. I posted this on X. Didn't post significant commentary, so I thought I'd talk about it here. Put dominated here. This is where we're at, Daniel. You know, it's negative 4,000. Not a significant entrench, but it is a little bit more edge to the overall bears for the day. So the full structure is call dominated, but at almost a 0 point that could easily flip put dominated. And now the 0DT is put dominated. So price appreciation to the upside is probably going to be significantly difficult for today. Again, unless we see a large change in sentiment and structure, as well as observing our vol M command without the money call speculation. So drunken sailor range, extremely wide today. So within this overall range will be choppy, driven by the 0DT call versus put speculation, which would be our vol M command. And then you see transition here at 40.45. It's a confluence of GEX and DEX. So at the very least, we would have to get above the transition and see and observe some out of the money call speculation to have an upside opportunity. We would most likely, if we're under it, we would continue to be prone to failure into this overhead transition area. You see this large double strike here, and then obviously the charm level overhead. And then to the downside, 67.80 is the PGEX level. Again, we would most likely anticipate some sort of bounce into this lower area. 67.70, 75 is kind of the overnight low. If we get below that and really see the out of the money put speculation to the downside via our vol M command, then we could see significant weakness, even down towards 6,700. So again, it most likely may be a hands-off trading day. If we're below transition, we give the edge to the bears and weakness for a move down towards the bottom of the drunken sailor range. If we're above transition, we would have to see a large amount of out of the money speculation to really drive up towards this PGEX level at 68.60. So hopefully that helps everybody. Let's go ahead and jump into the trading view chart. I've overlaid the drunken sailor range as well as our key levels, as well as our MTM market trend model. This will update. Obviously, I'm on the spread X, which is the projected for this morning. And when we switch back to SPX, this will update there. But again, to the downside, 67.95, that in trends, we already talked about that full expiry area, 67.80, the bottom of drunken sailor range, as well as negative GEX for the full expiry. So again, key levels to the downside to watch, and then transition levels to the upside, 0DT, as well as full expiry, 0 GEX, P trans. We would definitely need to get over those for have any opportunity for upside appreciation. So most likely some more weakness for today, could be supportive into the 6,800 level, and the two key levels below us at 67.80 and 67.95. All right, hopefully that helps everybody for this morning. Let me know if you need anything. As always, check us out at gameedge.us. Click on our newsletter in your email. You'll be delivered on the weekends, our Beyond the Bell newsletter that goes over all of our strategies, and how we view the SPX options market. And then, as always, click on our blog post, again, our free courses, GameEdge Fast Pass, flagship options course, it's free. And then as well as our blog, tons of education there. So let's check out a couple tickers really quickly. UAL. Give me 1 second here. All right, so UAL is call dominated for all expiries here. We are within the overall, or at the top of transition here. Supportive type action for UAL. Let's look at the closest expiry here. So you're actually above transition, PGEX and NGEX below you, so supportive down towards 104 and 105. Highest area sensitivity to the upside or speculation would be COTMC at 112, and call dominated there. After this expiry, we see the structure really maintained about the same. Call dominated 108, 107's PGEX, 112 COTMC. So those are the areas I'd be looking for the upside and supportive on the downside. So hopefully that helps there. Chuck. Baba. Check out Baba. Put dominated for all expiries. We see transition area here and spot prices below transition, so it's a little bit weaker. You do see PGEX up here at 200, NGEX at 150 though, spot prices below that and below transition, so fairly weak and put dominated. This expiry, put dominated, below transition, so fairly weak on BABA. And then 26th, see here, put dominated also for next expiry, transition area. So yeah, just overall weak for BABA. Not really seeing anything positive on BABA unless you're short. Tesla, let's look at that one. Call dominated. Let's look at this nearest expiry. Let's check all expiries first. So call dominated, above transition. Tesla still looks great for a move up towards 500. Really nothing changes on Tesla. Supportive all the way down. Transition looks good. NGEX 435, PGEX 500. Structure still looks good. Transition widens a little bit into the end of the month, but still supportive. 500 looks like the target for Tesla. So really not seeing anything there. AVGO. Yeah, agree, Paul. Key takeaway there, Chuck, was virtually no OI for the end of the month expire on UAL. Yeah. I probably should have mentioned that. So AVGO call dominated, spot prices within the overall transition. Again, all expiries turned on. PGEX to the upside is 360. We see COTMC at 350, COTMP, and then NGEX down towards 310. Structure definitely supportive on pullbacks, but you see a significant amount of puts at near strikes here in between those larger round strikes. Let's look at the expiry for here. Okay, so spot price within transition, so most likely some choppy price action. We are call dominated here for the 330 strike as well as the 350 strike, but you see a significant amount of puts around those individual strikes within the overall transition. So it's going to be difficult for price to move up towards that 350 level. I would anticipate some choppiness just back and forth within this overall transition area. After that expiry, after the monthly expiry, we actually flipped to put dominated, so the structure weakens fairly significantly. You see a large double strike there at 330 and 335, right around where spot price is. So even though AVGO is call dominated, upside appreciation is going to be extremely difficult. You see this structure really change to red, put dominated, negative net delta, significant charm, headwinds, overhead, supportive down into this area, but a weak structure on AVGO after this expiry. And you're within the overall transition, so it's going to be difficult for price appreciation. So we'll look at that UAL for the end of month expiry. Yeah. Oh, total OI is only 143,000. So Chuck, on that aspect, we do have a filter of a total OI of 100,000, but when you're this low of OI, our dealer control metrics are really difficult to exert their forces. And that's why you see a lot of significant spacing in between these individual strikes. Also, there's just not a lot of OI between there. So take that with a grain of salt. So compared to, well, let's just look at this. Compared to Tesla end of the month expiry, you have 1.8 million OI. So Nike, yeah. Oh, next OI. Sorry, Paul. Let's go to the next OI. Yeah, next OI. Oh, yes. Oh, yes. So, Chuck, here we go. This is what Paul's talking about. Thanks, Paul. Appreciate that. The total OI for the next expiry is only 4,900. So that just basically drops out of the sky for the OI and positioning, and that's why you see this significant spacing between the strikes there too. So again, dealer metric controls or market speculation from a structure standpoint is really not conducive of looking at this and saying this is where positioning is at, except for the largest strikes, obviously. So we prefer obviously to have a significant OI, understanding that the structure and speculation where options are at and where the speculation at is most likely where price is going to go. And if you subscribe to the tail that wags the dog on the OI structure standpoint, then we want to see the speculation. Where the speculation is at is most likely where price is going to traverse the overall structure. So Nike, yep. All right, so Nike, all expiries turned on, is call dominated. You're above transition, so that's bullish. PGX is at 65, COTMC is at 71. Significant strike at 65, but not a lot of speculation to the upside here. As you see, PGX would be that high sensitivity speculation there. So let's check out the 19th. So PGX is still below spot price. So again, you see overhead headwind there from negative net delta as well as charm right around 70. COTMC, those were out of the money calls go in the money at 71. So again, not a lot of upside speculation there. Call dominated into the end of the month. OI drops significantly to 16,000. 70 to the upside would probably be the highest level. And then you see for the end of the month, we're actually within the overall transition area. So, all right. Okay, thanks everybody. Appreciate it. Thanks for joining us this morning. Again, like and subscribe on X and YouTube. Join us at gameedge.us. You can check out all of our education. And again, you'll be notified if you like and subscribe on X and YouTube when we go live with our intraday content, as well as any content we post for the day. Check out all of our pre-market posts and our overall structure as we head into the day. Let me do BA. Sorry, I missed that one. Jane Kelly. Call dominated, all expiries. Structure looks really good on BA, actually. Let's check out the end of the month. You are above transition, PGX at 210, so that's the upside area. I'd look for speculation. COTMC 212.50. That would be your overhead headwind, most likely. Negative net delta, negative charm there if you can get through 210. To the downside should be supportive into transition, 200, 195 through this monthly expiry. Call dominated, PGX moves up to 215, so speculation moves up, structure moves up. So that is bullish. So those are the areas I'll be watching, 210 and 215 overhead. So, all right. Thanks, everybody. Thanks for joining us this morning. Again, check us out on X and YouTube. And as always, manage risk, and we'll see you later. Thanks.